future of futures trading. With our cutting-edge chart
and official sign-up paperwork within the next 7 or so days here, so we're really excited about that. Wrong mic. There we go. Fix the mic. Sorry about that. Anyway, a quick reminder: stock hack. What we're gonna get. I mean, I think slam dunk to say we're not gonna get 0 and we're not gonna get 75. I think that's a slam dunk. But beyond that, whether we get 50 or 25, who freaking knows? You know, this is gonna be wild, because the implications aren't so much going to be around what was the rate cut. It's actually gonna be around what is the signal. All right. What's up, everyone? Hope you guys are doing well. We had a killer live stream this morning for those of you that joined. That was a lot of fun. Back on for the afternoon session here, just having some fun. And yeah, man, I got, let me switch over here because I got Meet Kevin up. I got some background music. And yeah, man, just this is how I rock. This is what I do, right? I just kind of watch some news. I like to Meet Kevin. He gives me kind of the real-time reporting on what's going on here, brother. Is the news good or bad? All right, I'm not a fundamental guy, so for me, it's sort of a nominal thing for me, honestly. Whether the rate comes in 0.25, you know, whether they cut 0.25, 0.5, 0.75, doesn't really matter. The big thing is, how does the market react and what do the charts say? That's what I look at. What's up, everyone? What up, Kev? Walking your dog, nice, bro. What up, Frank? Thanks for being the first comment. Goes to Frank. Frank, you got. Frank the Tank, everyone. Frank the Tank. But yeah, man, just God, I haven't done my hair today. I'm gonna just reduce. I'm gonna make me a little smaller. You know what I'm saying? Oh man. We're gonna dive into the charts in just a second. Make this a little smaller over here. I got me Kevin going. You guys will be able to hear his rambling and my rambling. It's like double ramble. But I am gonna listen to him. Just see what happens when the news gets released, and just have some fun, man. So we got the FOMC minutes, okay? Not the minutes, the funds rate. Sorry, minutes is a different news day, but the federal funds rate. Then we have 30 minutes from now, roughly 35. Jerome Powell will take the stage and talk about, you know, whether or not he's hawkish, bearish. The market's going to interpret that the way that they interpret it. So right now, what we want to do is just stay put for the next 4 minutes, 20 seconds, and look at the charts and see what kind of levels we're working with. So I'll pull up the charts and dive in, okay? Market did exactly what we talked about this morning, dipping down. Didn't quite grab that previous daily low, but what I tell you guys, so we already broke structure on this lower time frame. This is the 1 hour. The high time frame is still up. Structure is looking good for the upside, to be honest. I would not be surprised if we tap liquidity above from at least previous day high, or possibly daily highs. Possibly today is a runner. Who knows, right? I've been sort of bearish, and I'll be honest with you guys. I've been sort of bearish because my thought is in this place where it's like the market isn't going to have a clear direction either way. Even if it's a 0.25 cut, if it's a 0.5 cut, if it's a 0.75 cut, like there is no real, what does that mean? There's no real clarity, right? So that's kind of like where my head goes. The uncertainty is still there. The market does not like uncertainty, so there's that. So we're going to pay attention to the levels that, why does that say it started soon? Hold on, let me make sure this is good to go. You guys getting my stream? Just make sure. Let's see, making sure. Okay, you guys got the stream. Good. I was lagging on this side. I just want to make sure. So basically, waiting for these liquidity levels to get grabbed is important. Okay. We're going to turn up me, Kevin, just a little bit.
Actually, you need more than that.
Cool.
You know, you need like 50, 50, 25.
And so I'm waiting. I thought this morning that we would basically, I had two scenarios drawn out on the board, right? I had a scenario where we go grab the highs and then turn lower. And I had a scenario where we do the opposite. We fill this gap. Now, price did dip, but it didn't quite fill this gap and then turn up. So, okay, I'm going to turn him down a little bit. Him talking, me talking. You guys got enough dopamine now? Jeez. All right. Nice little buy wick here. 2 minutes to go on this 4-hour candle. So 4-hour close is going to be a little telling. Is this where the market wants to go, or is this more of buying pressure below us? You could interpret it either way, really. So it just kind of depends on who you are. So we got, what, 1 minute, 2 minutes, 1 minute, 2 minutes to go for the market to drop. Market to drop. Whoa, I said that's maybe, I didn't mean to say that, but maybe that's telling. Maybe that is what's going to happen. Who knows? I've been a little bit bearish. I'm not going to lie. We have this gap below. So I've been a little bearish. We pumped city, but hey, you know what? Anything can happen. I'm not opposed to it. So we're going to wait. We're going to look at the initial direction, see what liquidity has been grabbed. We'll go down to a lower time frame, use the one strategy for life for entry, and then really money manage the crap out of it. Sounds good? All right, I'm going to turn, let's see, turn this, turn me and Kevin up just a little bit.
52% chance of 50. So it's going to be really interesting to see which direction this goes. About 1 minute away. The current, I'm going to write this down, the current FOMC rate is 5.5% to 5.25%. As this goes down, expect yields on money markets and savings to go down right away. Expect savings rates to drop by Fed drop right away. Yeah.
We're going to take a look at a couple of other things here on the chart too.
I'm kind of excited to see what happens here.
Bitcoin, everything consolidating, so no real tell signs.
Now 40 seconds away. We got the Qs at 11 basis points. Let's kind of tag where we are.
The only thing that's been happening is that the GBP USD and Euro USD, I mean, a little consolidation here, but before this, they were kind of running up. So, all right, let's check it out. Here we go.
Amazon
News is coming in.
As flat. Microsoft
15 seconds.
Here, so we'll keep an eye on some of these. You know, we'll throw our friend Palantir in there too.
I'm excited to see what the overall market does. So I'll have the overall market just kind of Nvidia,
so,
Microsoft,
folks,
Tesla.
No all
right, 6 seconds, 5 seconds.
Consider
Let's see.
a great financial advisor on your team.
Quiet.
You can ask.
All right, news dropped. It's pending. Of course, retail traders, we don't see the news when it drops right away, do we? They make us wait. Come on. Initial move is up. So do we grab that liquidity from above first? I don't know. Let's see if Kevin is talking. Where is it?
Of 4 3/4 to 5%. There was one
all right,
0.50. Governor Michelle
0.50.
preferring to cut by 25, but 11 voted.
I don't know
in
how
favor
we
of
don't
50.
get the news.
It
We're sitting
might
here
have been
waiting.
Close. I'll come back to that at the end of this report. The statement says the committee will consider additional adjustments to policy based on the data, the outlook, and the balance of risk. The summary of economic projections saying an additional 50 is expected or forecast by.
All right, so 0.50 rate cut expected, 0.25 to 0.5, 0.25 to 0.5, so expected.
Or additional 50 basis points from where we are right now. Another 100 basis points of cuts.
Okay, so previous daily high grabbed.
Okay, Fed officials see the median Fed funds rate at 4.4 at the end of the year. My thought was 4. The fact that you weren't unanimous is interesting. Bowman being the negative, 11 to 1. Fed projections imply 50 additional cuts. That's 100 more in 2025 and 50 in 2026. That would take you down 200 basis points from now. That would take you down to 3.25. I think we're going to go way lower than 3.25 to actually spur employment. Policymakers see 2% GDP in 2024 versus 2.1%. Inflation has made further progress towards the 2% objective. Median view of Fed funds rate at the end of 27 is 2.9. End of 2025 is 3.4. Policymakers see see, let's see, view of Fed funds rate, longer run 2.9, previous was 2.8. That's up a little bit. Carefully assess incoming data, evolving outlooks to risk. Fed has gained greater confidence. Inflation is moving sustainably to 2%. Judges risks to employment.
Okay, initial
inflation
moves up.
roughly in balance. Outlook is uncertain. FOMC attentive to risks on both sides of the mandate. Sees end PCE inflation at 2.3 versus 2.6, lowering the inflation outlook. Activity expanding at a solid pace, but job gains have slowed. Unemployment rate has moved up but remains low. Quantitative tightening continues at previous pace. No changes here. Bowman dissents. Okay, wow, Tesla jumps on that. The interest rate sensitives, probably, I was expecting Tesla and Enphase to move on this. Yes, Enphase moving big on this. I don't know if it'll last, because it will, like, Powell's talk could potentially create some nervousness around recession. But yes, obviously, we are expecting a jump in the interest rate sensitives with a 50. Did get a 50 here, as expected for me, but markets were very, very 50-50 on this, which is fine. That makes this.
All right, we'll turn him down a little bit. So basically, look, guys, this is a lot of fun. We've been like expecting this for a while, so finally it's here, right? Was it a long, beautiful 7-day profit long? Nice, man. That's awesome. I was in a long. I just went long to go long. I love it. It's fun. That is fun.
Change in real GDP.
All right.
GDP, they're keeping everything at 2%. They are not trying to signal a recession. This makes sense that they're trying to do that. And they're trying, even like 50 signals, they're trying to avoid a recession, right?
All right. Well, the initial move is up. We got Jay Powell speaking here at 1:30 Central Time. Turn him down a little bit. I have nothing else to say, nothing else to listen to there. Yeah. So, guys, we're in a premium on a 4-hour. We're in a premium on a daily. We're in premiums. Okay. So to me, it might make sense to be looking for shorts later. But I don't think the market's gonna, I mean, look, I'm just gonna throw it out there. If the market takes this as positive news, we're just gonna go up for the rest of the day and possibly even in tomorrow. So we just have to respect whatever it says, right? What was that? School, okay, yeah. Did I bank? No, I wasn't in a trade. I wasn't in a long or anything. I haven't been in any trade since this morning. We took a trade this morning and it ended up pretty good. I'd say okay. Ended up all right. So I got some W's. I bet some people in here got W's from this morning. You guys can type W in chat if you got a W with me on live trading this morning. That was fun. But yeah, basically taking this news in and not really trading the news, just kind of like taking it in, looking at what the market does, and potentially trading it if it makes sense later, maybe. But I'm gonna chill right now. I'm not gonna do anything right now. This is a lot of volatility. The market's kind of in this consolidation range. So my guess is if we close, even a 30-minute candle outside this range, which you can see we're already pulling back inside the range, that 30-minute candle closing strong outside the range could potentially be your breakout. And obviously we're in an uptrend, so I was hoping for a gap fill down in this area. I was hoping for a gap fill here, right? And maybe filling like 50% of this gap. In fact, let me go up here. This would be the full gap, right? So I was hoping for a price to kind of give me a nice signal down here, a little bit lower, like 50% of that fair value gap, somewhere along those lines. But it just didn't do that. So it's fine. It just would have been a lot easier to look for a long down here than up here. And that's because we're at a premium. It doesn't mean that you can't buy at a premium. It just means that you need to be aware. And a lot of traders end up FOMOing and chasing. So that's why they lose. So that's why I always say, like, just wait until you're in a premium and sell, or wait until you're in a discount and buy. So interesting. Very interesting. This is starting to look like a nice W recovery to me. Man. Down here would have been nice, right? So something like this. But on the daily range, you're still inside of this previous swing high. You have a swing low down here, so that is your daily range. So I'll mark this in blue. This is the daily range, just so we have clear ranges set up, right? This hour range is where we're at right now. So I'll go down on the hour. Looks like price wants to potentially close outside of that range, which would signal that we're going to go take this previous swing high. Which, let me move this up because the swing is actually up here on the hour. That's where the liquidity is at. So I'll go to the 4 hour. We can kind of see the liquidity is going to be above these areas where it's really obvious. But I would say probably a lot of these positions are already scaled out by this point. You know what I mean? Most likely you're not going to be shorting the NASDAQ if you're a hedge fund. You're going to be longing, bro. Go back 50 years. Come on, man. Get with the program, man. But we'll see, because when he takes the stage, when Powell takes the stage, it could just potentially reverse. So that's what I'll be looking for. I'll be looking for price to get down in this area and then a reversal to the upside. And I want to buy. I want to buy, my friends. I don't want to sell. This is not bad news, you know? So why would I want to sell? You know, if it was bad news, then maybe I want to sell. But right now, I want to find a reason to buy. You guys doing all right? You have a good trading day so far? How you guys feeling? Eh? Yeah, so you got a 5-minute breakout. You probably got a 15. Yeah, nice 15-minute breakout above the range. Broke structure here. You broke structure here. We already, you know, we already caught this long this morning inside of this hour time frame, but this particular higher time frame is still holding strong. So high of day is broken. Obviously, this is nice selling going on right now. And what could be happening is a break and retest. It's their classic break and retest model. So you have nice liquidity, nice fair value gap here on the 5, excuse me. So I mean, this is technically your breakup structure here. You already changed character, so you don't have to worry about that. So this is a change of character here, right? So you break structure, you use your fair value gap that price has given us, and potentially if you're long for the day, if this is kind of like the idea to go long, you didn't see this wick. This is what I consider a data wick, right? A lot of people don't really consider these wicks to be important, but this is a data wick. A lot of times price will return to the data wick and fill it and capture the liquidity below it. So this is the area that I'm going to be looking at. I don't think I want to take a trade here, although this could be, depending on where the price closes here. It looks like you got 6 seconds. This is a nice fair value gap. So you do have the fair value gap. You have your breaker. You could take it at the edge of that fair value gap, you know, and you got 2 options. I mean, well, you got a lot of options, right? But with your stop, you could go tight and go with like a small risk reward, because in theory, if this is going to respect structure, this should bounce off of the shelf kind of nicely. And in my opinion, obviously, guys, this is my opinion, not financial advice, right? So just what I see a lot of times happens is that if it's going to continue the uptrend, it's going to bounce off a shelf and it's going to continue the uptrend, right? So this is all about probability and odds. And I think the biggest thing is knowing market structure and liquidity. So we grab liquidity. There were sellers outside of that liquidity zone. We close this, let me see, this 15-minute candle has 4 minutes to close. It's not closed outside of the 1 hour range, right? So we're still within that 1 hour range. And what we want to see is on these lower time frames, we want to see the 15-minute close outside of that range, that 1 hour, that 4 hour range, 1 hour range. So right now we're in the 1 hour range. And that would give us a sign that price really does want to move and leg up. When it legs up, we'll be looking, well, I got to zoom out here because it's so far left, but we have liquidity levels literally right over here where that, I'll just mark this, where that previous day high was taken. So this has already been tapped. Here is the next liquidity level. You see almost to the tick that was tapped. So on a lower time frame, like a 1 minute, that's a swing. And let's see what else. We have really this level up here. This is a previous daily high, previous session high. Let me see. Is that a previous weekly? Yeah, that is a previous weekly high as well. So you got previous weekly high above us as well. Lots of liquidity below us. Make no doubt about that. Price can fade back. And this is why I was saying I was more bearish than bullish for the fade. And if it pulls back into this gap right here, this is what I would really prefer. I would prefer price to take some of this liquidity below and then just moonshot. You know, let me get in, dog. Let me get in some good pricing down here. You know what I mean? But this is a higher time frame. So if we're going to take scalps, we need to be really looking at lower time frames. And let me go to the 5 minute. So here's what I was saying. There is your 5 minute. Now you're getting a sell off, right? So you have two options. Like I said, you can go risky. This is more risky. I'm not in a trade. I'm not taking this trade, just to be transparent. I am waiting for this liquidity to get grabbed down here. But if you wanted to take the trade, if you guys want me to, you want to pressure me into taking the trade, I'll take it, fine. But I'm going real light. I'm not doing anything heavy in this area because it doesn't make any sense. We're still at a premium on a 4 hour. Okay. And in the 1 hour, we're at a premium. Oh, okay. It already grabbed your stop if you're right, if you're going risque. So that's what I was saying. This morning, like I said, widen your stop out, get a little bit of a chance to manage the damn trade. Don't try to like squeeze yourself or choke price too much, because you know you can really find yourself in trouble. But yeah, right down to a shelf essentially, and you have your data lows. So that's why I'm not taking the trade. So I didn't really want to take this trade, but it is a setup. It's just I want to show you the setup. It's kind of a messy setup. But if you wanted to take that trade, what could you do, chat? What could you do if you want to take that trade? I know you guys know. What could you do? Let me know in chat what you could do. If you wanted to take this trade, what could you do? What are some options that you have? What could you do? Go all in. That's hilarious. You could go all in. You could lower sizing. Exactly. So you could hammer this with lower sizing. If you knew that these data lows were there, you could stack your orders, right? And I'm not saying increase your risk. All of these stacked would equal what you normally risk on a trade, right? Your stop loss in the same positioning. There's a lot of volume in the market right now. So you could definitely put yourself in a position to manage the trade, right? So you could stack, you don't have to. You could lower your sizing like I did. I lowered my sizing and I got an okay position. We're going to close that out. Let's see here. What do we got going on? Let me just go to today. Okay. Lower position. I guess I didn't take the trade. Whoops. Okay. Well, that's what I get. Okay, look, I'll even get a bad position just because I said I would. I'm not going to be an a-hole here. All right. I'm not going to leave you guys like that. Low position. I'm talking like really low, you know? Okay. Whatever that means for your account size. I took a horrible position. Horrible. Look, a $218,000 account, and I took a point freaking 2. Okay. When I say low, just for fun, I'm telling you low, just for fun. All right. But we're in profit. So there you go. All right. So that is a scalp. Like you're going to be closing that trade out. Especially if you got in down here, you're going to be closing that trade out. It's a scalp. You're looking for 10, 20, 30 points. Maybe this is already what? 40? No, 20. So that's a 32 point move from your entry. And look, I mean, yeah, you could argue your drawdown was almost 50, but this is a win. I mean, that's all there is to it. And there's no real bottom wick. You do have some buying pressure. Leave some room, leave some tank, some gas in the tank if you want to try to go long instead of break even stop. Take 80% off the table, whatever. Set a trailing stop. You're probably going to get stopped out though, because there's a lot of movement and we have data wick lows. So I'm pretty much guarantee you that we're going to get stopped out. Now today looks insane. So I apologize because there's like a lot of I thought there was a lot of trades. Maybe not. Sheesh. Okay, weird. I don't know why today is showing differently, but okay. Yeah, so I guess I made like 176 bucks today. I thought I wasn't even, look, this is what tells you I don't pay attention to what I make or what, I only pay attention to the charts, man. I guess I didn't even look over here. Oh, I know what happened. Whoops. Holy cow, guys. Okay. I just figured out what happened, and I'm pleasantly surprised, actually. I'm pleasantly surprised. Okay, so I have another account. This is freaking hilarious. I have another account that I did not mean to trade on, but you can see. So this account, I took a withdrawal, like what I take, $2,500 withdrawal, and you can see what I made today. Look, hold on. Let me get this going here. I know there's some glare, but I always do that. I'm like, this is just something I have to do. I have to be transparent. I have to show my terminal. If I don't do it, people on YouTube go crazy. So yeah, this is a much smaller account. And I went in larger sizing, thinking that it was the big account. So $2,400 profit was not intentional. I just want to be freaking clear. That is, according to my balance in this account, let me just be clear. There's my balance in that account. It's an $8,000 account, dude. And wow, that was pretty cool though. I gotta admit, I'm pleasantly surprised. So what does this teach you guys? It teaches you that somebody that's been trading for 7 years gets it wrong sometimes and chooses the wrong account to trade on. Because my $218,000 account does not have a $2,500 profit today. It has $170. Oh, good Lord. Oh, man. Oh, Meet Kevin's baby's cute, man. Look at his baby. I'm a fan of Meet Kevin, dude. I don't know. He seems like a really nice guy to me. So this was a pretty solid trade idea. You just got to give yourself room, guys. Type W in chat if you got another win today. Let's go. This should be a break-even stop. Nothing can hurt you. The only thing I want you to point out, or that I want to point out to you, is that we have a very little bottom wick. That's okay because there's a lot of buying pressure right now. So this could just potentially moonshot even further. But I really want to stress, we go down to a lower time frame. Okay, here you have fair value gaps. Now you can really start to manage this by what I call micro manage this trade, right? So here's a fair value gap right here, and you can basically set a rule, right? So now you know that if you let this trade rock and profit, you can, let me go back so I can get that stop loss there. Let me just make this clear. On this lower time frame, right? You can even go to a 30-second because you entered in on a 5-minute. That's like a very low time frame. So if you're scalping, you want to manage this trade. How do you do it? There you go, right? There's a fair value gap on a 30-second chart. So let me mark that in here. If that gets broken, right? If price inverses this fair value gap, then you're out. It's as simple as that. Like, you're out. And you can make that rule and protect yourself and let these winners ride. This is how you manage your trades, guys. When somebody taught me this a long time ago, I finally realized why there are losers and winners in trading. And that is because the winners in trading know how to let their winners ride. The losers in trading take small profits and let price go down too far before they get out of a trade. So in this case, guys, look, we made this a cheaper trade. Why? Or how? What defines a cheap trade? I know I'm going off. Type just one W off that? Come on, guys. Wow, I would be shocked if there's one freaking W. Come on. Anyway, so how do I make this a cheap trade? If price closes a candle body, all right, inversing this fair value, this breaker, right? So disrespecting this breaker block. Let me label that. It's a 5-minute breaker. So I've done a really bad job today. I apologize. Then, of course, I'm going to get out of the trade. You know what I'm saying? So this just makes sense to me to get out of the trade early. So now I'm protecting myself. I don't have to let it come down here, even if I'm not sized up, right? Even if I'm sizing down a little bit because we're in a premium on a higher time frame. So that's kind of the way I see it, guys. Once again, like it's my thoughts on the market. It's not, I think there's many ways to be profitable. And we gotta stick together, man, because I'm telling you, man, like the institutions, I said it earlier, they're working together. They're working together, getting themselves out of trouble when they get in trouble, buying each other's, losses when it makes sense. And we're sitting here trying to fight and pull hair over who has the best strategy. And it's just like, we just got to do a good job trying to help each other, right? That's what the community is all about. I have a community on school. That's where I trade. Yeah, love it. Mike showing his phone. We have to get up to the screen to see it. Sorry, man. It is what it is. Do you trade live every day? No, I trade live every day in my community. And I have like a private group and I trade live in there. So if you want to find out more, check my description. The links are in the description. I have a webinar, sort of a webinar training and overview. You can check that out. And right now it's, we got something really cool. I can't announce it yet, but we have something really cool coming to the private group. So do you trade, let me see, what broker do you use for your MT4? I thought it was banned in the US. Hey man, don't be telling on me, dog. Shh, what are you talking about? There are particular brokers that still allow it, and I have one that I like, but you can use any broker of your choice. I don't really rep a broker. You know, I've been offered to, but it's not my jam, man. I will tell you, I have used, they're not accepting any United States citizens anymore, but I've used Lirinix, Liru, Lirinix. I think they're a fantastic broker. I've had multiple six-figure withdrawals. So I think they're great. They have a sister company, and it's called Long Asia, Long Asia. It's the same clearinghouse. So I don't know if they're accepting United States citizens. I'll just say that, but they are their sister company, and they're pretty much brand new. It should be the same back end. So yeah, take that for what it's worth. You can do your own research on brokers and everything. The problem with a lot of people trading futures, right? Because I love futures. Don't get me wrong, man. Yeah, that's it. Trackzilla, that's it. So like, I like futures. Don't get me wrong. I want to eventually get to a place where I'm a little bit more comfortable trading futures. The problem that I have with futures, okay, is that it's not that I want to go too risky. It's just I have other accounts, right? So I have like that 8K account was a 5K account moments ago before I messed that up this morning, right? And didn't mean to make that kind of money on there, but that's a small account. I like to try to compound those quickly, and I need 500x leverage to do it. And I need a higher, you get a higher threshold for your margin with CFD brokers. I don't really care about the spread too much because I'm not trying to catch 30-second moves on the chart. To be honest with you, like, I think a lot of that is, I don't know, man. It's very tough to do consistently. I've been trading 7 years. I like the higher time frames. I like wider stops. You have more time to manage your trades. You just need to learn how to manage the trades. That's it. So anyways, that's my ramble. That's my rant. So look at this. See how price came back down, respected the fair value gap, and now can continue. So the rule here would be that if price inverses this fair value gap, then you could get out of the trade. Does that make sense, guys? So it still is in an uptrend. You should still, like, okay, press conference in 4 minutes, got it. You should still look at this as this is still potentially going up. You have news coming up, so where could you put your stop here? You'd have a trailing stop like right outside of this gap. If price inverses this gap, closes a candle body, then you could get out. You could even have your trailing stop here. You could have a little bit lower, but I prefer to just let this rock until it says to get out. Now, if we can leg up, if price can leg up here on a 1 minute, right, create a leg, this would be your new shelf. This is the shelf it's basically eating into, right? You have your liquidity wick. So if we can make a higher high and disrespect this high to make a new high here in 4 minutes before the news, you might have a chance to go take out the highs. This is going to be a really interesting place because at that point you have a shelf below. You might take out liquidity, bounce off this shelf here, and continue higher. But that would be like, I'm looking at, when I'm seeing a 1 minute time frame, in my head I can see what the 3 minute, the 5 minute look like. So you really have a candle body that needs to close above these ranges on a 5 before you're a little bit more confident that that's going to continue up. Honestly, if you're looking good and you're in profit, you take 80% off the table, let the rest ride, man. You could even set a stop loss to break even down here if you want. There's a lot of ways to manage, right? But it's Where you get in trouble is when you just do not manage anything. You let it set it, forget it. That's where I get a little, you know, yeah, that's where I get a little iffy about the whole situation, because like, you know, for me, I've always found that managing trades work better than just setting and forget it. That's just me. Yeah, I'm with Lear. I have an account with Lear. I have multiple accounts with Learnix. I have an account with another broker too. I like Learnix though. I have a small account. I'm just testing it out with another broker. I don't put money on these brokers that I'm not like very well aware that I can lose. I made that mistake in the past. So yeah, I'd be out of this trade, man. Just kind of disrespect. It's not to say that there can't be some buying pressure, but look at the resistance building right here, right? So just kind of clear signs. The clear sign is this candle body closing, and you can use a 30-second chart. See, okay, so on the 30-second chart, what did you have? You had a fair value gap right here, right? And then price touches the top, fills it, and basically disrespects it, and then inverses this internal fair value gap. So this was like your early indication that this could be headed right back down. Still respects the gap barely, but anyways, I think this trade, I think we're done talking about this trade. You know what to do. You know what to do, dog. Prop trading, what about it? Yeah, I mean, people have their own opinions on it, you know? I don't really prop trade because I have a live account, you know? I built this live account up significantly, so I took my withdrawal, took a significant withdrawal a few months back, and you know, I like trading my live account, I like being in control of my own money. I don't like being dinged because of regular price movement. And my way of trading, my philosophy in trading doesn't quite align with those who think that prop trading makes you disciplined. Okay, it makes you really disciplined. Okay, I'm not even going to go down the road of arguing with myself over here, because this is about the FOMC, man. This is about the Fed rate. This is about just having some fun. But I think it's a lie, a myth that there's so many people profitable prop trading. Yeah, right, dude. Not happening. I promise you, it's not happening. You know, setting your risks low with no matter what you're trading. I believe that setting your risk low, just my opinion, right? Everyone has entitled to their own opinions. My way of trading. I think that setting your risk low and being comfortable and having a good setup, a nice entry model, from there understanding, you know, what you're going to do, where are your liquidity targets, where's your profit targets, what are you going to do? And if you have that, man, I think you're going to be profitable no matter what you trade. But you need a solid entry model first, or else you're just entering whenever you feel like it. That's the first step. That's step one. Yeah, but dude, James he's been trading with me for a year. So it's a little different, man. When you get I'm talking new traders. I'm talking like people that haven't traded before, people that think that they're going to be profitable by trading a prop account. They want to get funded. It's the allure of it makes people make big mistakes early on, and you actually build bad habits, not good habits. But I'm not going to get into it.
Will be live. We'll talk about that. We'll say that. Next meeting will be live. You know, they like that word. Okay, all right, ready? Take a screenshot of this. Take a screenshot.
Oh, okay, he's got the bingo. Right, that's funny.
Should be out any second now.
So, but I think we got to look back at the pandemic was the root of evil.
We have to leave it there, Claudia, as the chair is
Laptop.
now ready to speak. Let's listen.
What the hell is this?
Remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
Oh, wow. Look at the dollar.
We also decided to continue to reduce our securities.
Did not get
holdings.
above that level. Broke.
I will have more
Holy
to say
crap.
about monetary policy after briefly
Well,
reviewing economic developments.
Those of you ready for the dollar to crash, here
Recent
it is.
indicators suggest that economic activity has continued to expand at a solid pace.
Wow.
GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after
Look at
rising
gold.
strongly in the first. Improving supply conditions
Literally put this up here earlier, guys.
and the strong performance
Talking
of
about
US
the entry
economy
on
over the
gold.
past year.
Went up, tapped
In our
again,
summary
boom,
of
hit
economic
TP.
projections,
I mean, that's just a little
participants
one-to-one,
generally
but
expect GDP
took
growth to
off.
remain
Holy
solid,
crap.
with a median projection
Gold
of
is out of
2%
here, dude.
over the next few years.
Gold is out of here.
On the labor market,
Wow.
conditions have continued to
Ooh,
climb.
so
Payroll
suspect.
job
Look at
gains
this,
averaged
guys. Look.
116,000
Look at
per
this.
month over the past
What
month.
is suspect? Somebody
The
type in
notable
chat. What is
increase
suspect
seen
right there,
earlier
dude?
in
What
the
is
year.
going on right there? Would somebody type
The
in
unemployment
chat?
rate has moved up, but remains
Why do
low
I
at
think we're gonna dump
4.2%.
now?
Nominal wage growth has eased over the past year.
Dang.
And the jobs to workers gap has narrowed.
Oh, boy.
Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just
What do you guys
before the
think?
pandemic in 2019.
What do you guys
The labor
think?
market is not a source of elevated inflationary
Yeah, no
pressures.
wick. No wicks.
The median projection for the unemployment rate in the SEP
No wicks,
is
man.
4.4% at the end of this
Super
year,
sus.
4/10 higher than
Suspect.
projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%.
No wicks, so dumping.
Estimates based on the
I like
Consumer
that.
Price Index and other
No
data
wicks, so
indicate
dumping.
that
What
total
a...
PCE
Wouldn't that be
growth
funny if that
rose
was the whole
2.2%
strategy?
in
Yes, guys, so this doesn't have a wick. We're going up.
August.
This doesn't have a
Note
wick.
that
We're going
excluding
down.
the volatile food and energy
Had no top wick.
categories,
We went and created
core
it.
PCE
Has no
prices
bottom wick.
rose 2.7%.
Suspect. Super sus.
Longer-term inflation expectations
Got a
appear to remain
nice,
well-anchored, as
I
reflected
mean,
in
this
a
is
broad
just
range
out
of
of
surveys
control.
households,
That's crazy.
businesses, and forecasters,
You know, gold typically
as well as
pumps during
international
uncertainty,
financial
but it
markets.
definitely pumps when the dollar
The median
when the dollar
projection in the
drops.
S&P for total
So that's why
PCE
you see
inflation
gold
is
just
2.3%
pumping out of
this year
control is because the
and
dollar's
2.1%
dumping out of
next
control.
year,
It's really bad,
somewhat
actually.
lower than projected in
It's
June.
not good. It's
Thereafter,
not
the
good.
median
Nancy
projection is
Pelosi.
2%.
Well, wait. Oh, that's a different meeting. Hold on.
Our monetary policy
Euro
actions are
out of control. What did I tell you guys earlier, though?
to promote maximum
Right?
employment
If you were
and
here, what did I
stable
say about the
prices for
euro
American people.
and
For much of the
GBP?
past 3 years, inflation
I'm
ran
just
well
pointing
above
out.
the
I'm not enough for me to take a
and the
trade,
labor market
but
conditions
see
were
how that
extremely
whole
tight.
assessment. It's
Our
interesting,
primary
right?
focus had been
It's
on bringing
interesting.
down inflation,
GBP and
appropriately
euro
so.
have already
We are
broken.
acutely
They come up to
aware
the
that
top
high
of
inflation
this
poses
shelf, the
significant
top of
hardship,
structure,
as it
and you
erodes
can view it
purchasing
as
power
either they're going to
of
grab
professionals
liquidity
who are
here,
least able to
right,
meet the
and
higher
dump,
costs of
or
services,
they've already
food,
grabbed liquidity
housing,
and it's
consumer
showing a nice
prices.
solid uptrend.
Our restrictive monetary policy
Obviously,
helped restore
it's the
balance
latter
between aggregate supply and
because it's
demand,
out of here, dog.
easing inflationary pressures and
Let's
ensuring
look at
that
the whole
inflation
market.
expectations remain low.
Microsoft is neutral.
Our patient approach
Nvidia,
over the past year has paid dividends.
Apple's doing
Inflation is
okay.
now much
Tesla's
closer to our
rocking.
objective,
Tesla's
and we
almost
have gained greater confidence that inflation is
3.3%
moving
up. That's
sustainably
awesome.
toward 2%.
Super micro.
Basically declaring victory.
As inflation has declined, and the
That's
labor market
basically
has
declaring
declined,
victory.
upside
Yeah.
risks
The
to
Fed wants a
inflation have
soft
diminished,
landing. They might get
and
it,
the
actually,
downside risks
which
to
is
inflation have
crazy. They
increased.
actually might get a soft
We
landing.
now see the risks to achieving
Do you guys,
soft
do you like
landing
believe the
as
Fed? Everything that
roughly
they say?
as
I don't know, man. I don't
we are
know.
attentive to the
It's
risks to
suspect,
both
dog.
sides of our
Where are
dual
my
mandate.
conspiracy theorists out there?
In light of the progress on
Look at what
inflation
oil's
and the balance
doing.
of risks,
Nothing.
At today's meeting, the committee decided to lower the target
Nothing.
range for the federal
Oil's not
funds
doing
rate
anything.
by a half percentage point.
Odd CAD is on the move up,
4.75%
and so I would suspect that oil dips. And do we have any type of setup? There's nothing on oil. Oil is slow, dude. Gosh, I don't know if I could trade oil.
As we begin
too
the
slow.
process of moving toward a more
GBP
neutral
CAD
stance.
up. Okay, yeah, everything's
We are
looking
not
pretty
on
good.
any
The
preset
JPYs.
course.
Let me see the
We will
JPY
continue
pairs
to
just
make our
for fun.
decisions meeting
Not
by
that I'm gonna
meeting.
trade a JPY pair right now, but
We know that reducing policy restraint too
sheesh.
quickly
All
can
right,
hinder
tonight we'll
progress
see it.
on
Asia
inflation.
session, dog. We're gonna see
At
some
the same
movement.
time, reducing restraint too slowly could unduly weaken economic
Yeah, you're just
activity
gonna
globally.
short the JPY
Considering
pairs.
additional adjustments to the target range for the federal funds rate,
Why
the committee
not?
will carefully assess incoming data, the
Why
evolving
not?
outlook, and the
Yeah,
balance of
Bitcoin's
risks.
following. I hear you. Bitcoin's
our
kind of
SEP,
leading the
FOMC
way here
participants
too.
wrote down their individual
Actually, it's
assessments
late.
of an appropriate
Bitcoin's kind of
maximum
late.
federal funds rate
It's already in this
based on
uptrend,
what each participant
right?
judges to be
Top of the
most
range.
likely scenario going
Let's go to the
forward.
4-hour.
If the economy evolves as expected, the median participant
I don't see any
projects
setup,
that the
though.
appropriate level of the federal funds
Maybe
rate
on a
will be
daily? No.
4.4% at the end of this year and 3.4% at the end of
Hourly? No.
2025.
What are we fading back? Oh, we're
These
fading
median
back.
projections are
We're
lower
fading
than June,
back.
consistent with the projections
All right,
for
I'm going to get
lower
this
inflation and
previous
higher
win off the
unemployment,
board.
as well as the changed balance of risks. These
Get this
projections,
off.
however, are
So we
not
did not
committee
close
plan
above that
decisions.
range. Still,
As the
guys.
economy
Still have not
evolves,
closed above the range.
monetary
Ready to go
policy
take out
will
those data
adjust in
wicks?
order to best
Those data
promote our
lows?
maximum
Let me
employment
clean up the chart a
and
little
price
bit.
stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face.
Get all this off the board.
Pursuing both sides of our dual mandate.
Let's check out
The Fed has assigned
SMT.
2 goals for monetary
Nothing.
policy: maximum employment and stable
Nothing.
prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
You better understand.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
All right, guys. I
Thank
appreciate you
Look forward
liking.
to your questions.
I appreciate the comments, the likes, all that stuff gets the algo
Steve
going.
Leachman,
You know what I'm
CNBC.
saying?
Thank you, Mr. Chairman, for taking our questions.
All right, here comes
in
the
July,
questions.
You said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based
that's a
on
good
what
question.
should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the 2 employment reports, July and August. We've also had 2 inflation reports, including one that came in during blackout.
He
We
lies.
had the
He lies.
key
Everyone's
CPW
saying he's a
report, which
liar.
suggests that the payroll report numbers that we're getting may be artificially
I'm gonna turn it
high
down just a little bit.
and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we
Gosh, the
took
market is
all
so
of
choppy
those,
right here, guys. This is so
and
dangerous.
We went into blackout and
Okay,
we thought about
so a previous daily
what to
high was
do,
taken.
and we concluded that this was the right thing.
I think this
for
is
the
important to
economy, for
look
the
at
people
right
that we
now.
serve, and that's how we made our decision.
Because
So that's one question.
previous daily high
What
was
the
taken, right?
second?
And that's the weekly. Yeah.
Sorry.
No,
thank you,
the
sir.
weekly's up here. My
How
bad.
do we
Oh,
figure
this.
out in the
Yeah,
months ahead,
that
is there
was
another 25 or 50
previous
coming in
week here.
based
Already
on what should we
taken.
make that
Previous
call?
daily
Thank you.
high.
Sure,
Okay. Yeah.
A couple things.
We're still within that 1 hour range. I don't know what to
A
tell
good
you.
place to start
Like,
is
it's
the
Bryce is
S&P,
just
but
not
based
wanting to
on
move
what I
until he
said,
gets
which was
off,
that
because
we're
we don't know what he's
making
gonna say,
decisions
right?
meeting
Once
by
he gets
meeting
off,
based on
I
the
think you're
income
gonna
data,
see
outlook,
a run.
balance of risks.
Yeah.
If you look at the S&P,
And it may even be
you'll see
like, I know it sounds
that
crazy, but
it's
sometimes,
the process
and
of
I've seen this, right?
recalibrating
It goes
our
like
policy
until the
stance
next
away from
day,
where we had it
and
a
it's
year
just
ago,
gone,
when
one
inflation
direction
was high
for
and
like 2
unemployment
days
low.
straight. So if
To
we
a
figure
place
out the
that's more
direction early, I
appropriate
think you
given
could
where we are
actually
now and where
get
we
a nice
expect
little
to be.
run.
And that process will take place over time.
What direction
There's
that's gonna
nothing
be,
in
I don't
the-
know.
in the S&P that
I don't
suggests
know,
that there
y'all.
isn't a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go
So basically,
slower
if
that's
everyone starts
appropriate.
losing their
Cost
jobs fast, we're just
but
going to
that's-
cut
that's
rates
what
to
we're
0.
contemplating. Again, I would
Which
point you to the S&P.
Hasn't really
as just
shown
an
cracks.
assessment
We
of
haven't
where
shown many cracks. I just know
what
so
the
many
committee
people
is
that are trying to
thinking
get jobs,
today, but the
so many people
individual
out of
numbers
work,
for the committee,
and
I
to
think
see
you
the
can
unemployment rate not go up
assuming
is
that their
freaking
particular
mind-boggling.
forecasts
I don't understand it.
are realized.
I don't understand it. But I'm not an economist, so there's that.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year.
They're next to each other.
Does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short run neutral as a little bit higher?
The market's not going to run until he's off
I
stage.
think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range.
Yeah, you do have a 1 minute BPR.
I think we don't know. There are
See
model-based approaches and
right here.
empirically based approaches that estimate.
Yeah, it's a
what
pretty
the
fat
neutral
one
rate
too.
will
You
be
got
at any
two
given time. But
you actually have two fair value
realistically,
gaps
we know
taken
what
with
price
one
works.
candle. So that's a
So
nice
that
little
leaves us
BPR.
in a
Already
place where
tapped.
we
That was a nice little
expect
scalp, bro.
pace to be
Nice
continuing to
little
remove
scalp right there is pretty cool.
and we'll be
I'm
looking
not
at the
gonna
way
trade
the
inside the
economy
range,
reacts to that.
but I totally
And
like
Friday
dude.
has to be thinking
I
about
respect these kind of
the question
setups
that
is
we're
what we
asking at every
teach,
meeting, which is
and
what's our
I'm not the only
policy
person that's taught it, by the way. But I just want to be
know,
clear, like
if you go back,
this
we
this
know
kind of
that
setup,
the
Kevin.
policy
You
stance we adopted in July
you how I don't even know how long you've been trading with me,
2003,
bro. Like over a year, right?
came at a
So I mean,
time
these
when
kind of
unemployment
setups
was
you're used to,
3.5%,
you know,
and
taking a
inflation
little
was
bit of risk,
4.2%.
and it's all about your
Today,
risk control, in
unemployment
my
is
opinion. Like I'm not going to hate
up
on a
to
trade.
4.2%.
It's just
Inflation's
something
down
I
to
am not going to do because I'd rather it show me this
So we
BPR
know
out
that it's
here when
time
we turtle soup the
to
high.
recalibrate
For me,
our
I feel a little bit more confident. But dude,
to
we're
something
at a
that is
premium.
more
I said
appropriate
that.
given the progress
So,
of inflation
you know,
and
is
on,
what it is.
employment.
Yeah.
Moving to a more
Boom. Here
sustainable
comes that. Here comes the
So the
short.
balance of
Go,
risks are
baby.
now
Go.
even.
Break.
This is the
Show me
beginning of
something
that
I can get
process.
into. Let's
I
go.
mentioned the direction of which is toward a sense
I
of
so
neutral.
who badly wants to short
And
this
we'll
market? I
move
so
as fast
badly
or as
want to be the
slow
big
as we
short.
think is appropriate
Like, I
in
just
real
wanna be
time.
that
What you
guy,
have
dude.
is our individual
I wanna be that guy
accumulation
so
of
bad.
individual estimates of what that will be in the base case.
By the way, in honor of the 50 basis point cut, we are doing a 24-hour flash sale. MeetKevin.com, stocks and cycles.
Shut up, Meet Kevin. I don't want to hear your crap. Actually, I kind of do. I'm gonna turn you back
$2.5 million
up.
call option trade on this.
$2.5 million call
Was
option
the
trade. Good for
weight
you, bro.
clearly
That
in
is sick.
favor of a 50, or was
That
this
is
a
cool.
very close decision?
I think we had a good discussion.
Next time I'm gonna watch Bloomberg.
You know, if you go
You
back,
a-hole.
I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion.
Dude, look
back
at
and
this.
forth,
Look
good
at
diversity
the
of opinion.
indecision
Excellent
in the
discussion
market.
today.
It's
I think
crazy.
there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year. All 19. That's a big change from June, right?
Wow.
7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, you know, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Yeah, 4 or more. That's my guess.
This is in the books. Can you give us some guidance as sort of just
Turn his mic on.
the pacing here? Would you expect this to be running every other meeting once we get into next year? For
Yeah,
example,
we're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, you know, make a good, strong start, but. And I'm very pleased that
I know some people took other trades.
From an economic standpoint and also from a risk management standpoint.
I know some people
clear.
took other trades. Who's still up,
I think
man?
we're
Type
gonna
W
go
if you're still up for the
carefully meeting by
day.
meeting
You got 2 wins
and make our decisions as we
from
go.
the live stream. You got your own trades. I want to see who's got W's, man.
Gina Smilik, the New York Times. Thanks for taking our
Who's up for the
You
day?
heard
FOMC's
policy
day is hard. Some people just skip
projections
this day,
today
dude.
see the unemployment rate
So if you're
climbing
up for the day, I'm
4.4% and staying there.
props to
Obviously,
you, you know?
historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically.
And I'm pumped,
stop. It
dude. I took that
continues
little
increasing.
5K count to
And so I wonder if you
8K
can walk us
in one
through
day.
why you
By
see
accident.
rising, sort
It's
of what's the
amazing.
mechanism there, and what do you see as the risks?
That's amazing.
Again, the labor market is
Stewart's
actually
got
in
4 W's. Come on, bro.
solid condition.
Now that I'm a little
And
jealous
our
of.
intention with our policy move today
Gold
is to
short?
keep
Did
it
y'all
up.
short gold?
You can say that
Whoa,
about
whoa,
the
whoa,
whole
whoa.
economy. The US
Whoa.
economy is in good
Oh,
shape.
look at
It's
that.
growing at a
Wow.
solid pace. Inflation is
Holy
coming down.
mackerel,
The
dude.
labor market is
What
in
did I
strong
tell y'all?
pace.
What did I
Keep it
say?
there. That's what we're doing.
What did I say?
Okay.
Damn
Right here,
it.
he's hawkish.
I should have just gone in
The economy's
shorts.
strong now.
I should have laddered ordered in. The hell?
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's
Right here. This is what we want to see.
constitute
We want to see a
catch-up
wick
in
right down
action
there.
given recent
Look, now it has a
substantial
wick. You're good to
revisions
go
the
up.
employment data? Or is this
Nope, just
larger
kidding.
than
No wick.
typical rate cut a function of the
Yeah,
elevated
dude, this
nominal
could be
level
a nasty
of the
short
policy rate
on
such
gold,
that an
especially if you
accelerated
close
cadence
underneath this
could
this
be
range,
expected to continue?
this 1 hour range. If price pulls back in that range, it's a problem.
Questions there, but so I would say
That's pretty
we
wild.
don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about
Like, the
reducing
market is pretty
policy rate.
nominal.
We've waited. Other central banks around the world have cut many.
Obviously, you can
several
tell.
times. We've waited, and I
But
think
nothing's
that
really
that
moving.
patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred
Good job,
about
Nick T.
How the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Okay, it's another tool.
Thank you, Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market. But this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So
Yes.
Our plan, of course, has been to begin to recalibrate, and as you know, we're not seeing rising claims, we're not seeing rising layoffs, we're not seeing that, and we're not hearing that from companies, that's something that's getting ready to happen. So we're not waiting for that, because, there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy we think is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Okay, fair.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a low. That's a very healthy unemployment rate.
I knew they would do that.
Anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that.
Everything's still more expensive.
Vacancies over
Everything. I don't care what they say about inflation.
Is back to, but it's still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person, as measured. It's now below around. It's about
now people are going to lose their jobs and they're going to go to zero on the rates.
Quits
and assets are going to skyrocket.
Normal levels. I mean,
my home's going to double again.
There are many employment.
And then my kids won't be able to afford a freaking home.
This is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months, and so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased, and because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data.
Who's president?
Don't look for anything else. We'll
Employment
see
rate
another
will be
labor
transitory?
report. We'll see another jobs report. I think we get we get a second jobs report on the day of the meeting, I think. Or no, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Hi, Chair Powell.
October 4th jobs report, November 1st jobs report, October 10th CPI, November 13th CPI. Write those down.
Do you view that level of job creation as
we can see
worrying
it
or
on
alarming, or
Forex Factory.
Would you be content if we were to kind of stick at that level?
Thanks, me, Kevin.
And relatedly,
Thanks,
one of the
buddy.
welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
Unemployment.
So on the
September,
job
let's
creation,
see,
it
what's in
depends
November?
on
October.
the inflows, right? So if you're having millions of people come into the labor force, then and you're creating 100,000
specific days,
jobs,
I see.
Immigration.
you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side.
I'll be right back, guys.
And on the beverage
Price is
curve
not doing
question,
nothing
yes,
interesting.
so
I'll be right back.
we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are, it's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Quick shout out to those of you taking advantage of the Fed flash sale in honor of 50. Sergio, Matt, Ruben, Jacob, Francisco, Josh, Nicholas. Thanks for joining the Stocks and Site group. Lifetime access. You pay once at meetkevin.com. 24-hour flash sales on now.
Has experienced zero or near zero federal funds rate. Now some think we're heading in that direction again. What's the likelihood?
You just promoted your crap again, bro.
So this is a question. You mean after we get through all of this?
I need to be more like Kevin. Just
Great
promote my
question that we
stuff
can only
all the
speculate
time.
about.
Just have it running at the bottom.
Intuitively,
Why don't I do these
many
things?
people anyway would say we're probably not going.
I'll be right
back
back.
to that era where
Again,
there were
I'm
trillions
hearing
of
stuff.
dollars
I'm
of
feeling like somebody's at my
sovereign
door.
Bonds trading at negative rates,
Back, man.
long-term
Leave
bonds
me
trading
alone.
at negative rates, and it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that, but honestly, we're going to find out. But it feels to me, and
all right, what's gold
the neutral
gonna
rate is probably
Somebody tell me what gold is going to do right now.
How high is it?
Somebody tell me in chat, what is gold going to do?
We only know it by its works.
Because guess what? The dollar is rebounding. What is gold going to do?
Rate cut now before the election.
What do you think it's going to do? All right, here comes our dippy dip to take out the daily
This
lows.
is my fourth presidential election.
Here we go.
At the
gold is
at the
going to
Fed,
dip.
and,
Ready? Gold.
It's
Shoop.
always the same. We're
Dip.
always going.
Go create
into
this wick.
this
Ready?
meeting in particular.
Here's a target.
and Asking what's the right thing to do for the
Right
people
here.
we serve, and we do that.
Don't get hung up on
make
this.
A decision
okay,
as
if
a
you
group,
get into a trade, it's on you.
and then
But
we announce it, and that's always what
that's
it
what I
is.
think gold's
It's
gonna
never
do.
about anything else. Nothing else is.
here's a
discussed.
dippy dip to go take out the
And,
data lows, baby.
I would also point out that the things that we do really affect.
Not that I'm in the
economic
trade. I seem
conditions for the
excited,
most
right?
part With a
Like,
lag.
oh, you in a trade? No.
So, nonetheless,
But
this
it's
is what we
exciting.
do. Our job is to support the
Such a
economy
nerd.
on behalf of the American people.
Since
if-
when did
if
I
we
become
get it
such a
right,
nerd, man?
This will benefit the American people
There we go.
significantly. So
Push down.
this really concentrates the mind, and it's something we all take very, very seriously. We
Wow.
don't put up any other
Did he say
filters.
something
I think
here?
if you start
I don't
doing
know.
that, I don't know where you stop. And so we just don't do that.
There's the data lows taken, guys. Going to be taken any second.
Thank you, Chair Powell. I'm Jolene Kent.
That's
NASDAQ
why-
just went negative, and things are starting to fall now.
Things are
which
starting to
I kind
fall,
of suspect that
okay.
there might be
I
profit
think I see
taking
that.
after this meeting. It's kind of what we predicted. Anyway,
Kind
you
of what
want
I said
more of
this
my
morning.
insights
Like,
and
we're going to
trades
go
and
down here and
ideas,
fill
my
this
$2.5
little
million call
gap.
option. Meetkevin.com, flash sale.
And
Hmm.
our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation
I don't know
is
what to
coming
say.
down closer to our
Midas
2%
Trading Group.
objective over
Link is in
time.
the description.
And the labor market is
Go
still
check
in
out my
solid
training.
shape.
Bye,
So
bye, bye, bye,
our-
bye.
Our intention is really to maintain
Oh,
the strength that
dude.
we currently see in the U.S. economy.
All
And
right.
we'll do that by returning rates.
What's funny is
from
that
their high
every
level,
single
which has
person in
really
here
been,
is
the
already in
purpose of
school.
which has been to get inflation under control.
So
We're going to move those down
it's,
over time to
pointless.
a more normal level.
There we go. Data lows going to be
over
grabbed. Gold creating the bottom wick. It's created.
Listening to you talk about
Who's got a
inflation
W?
moving
Don't
meaningfully
lie.
down to 2%.
I know you
Is the Federal
guys.
Reserve
Don't lie,
effectively
Mitch.
declaring a
Don't
decisive
lie.
victory over
Who
inflation and
shorted
rising prices?
to go get that wick? Jeez,
we're
what
not.
a
So
freaking
inflation,
move. Yo.
What
That
we
was
say is
crazy.
We want inflation. The goal is to have inflation
If I were just
move
risque,
down to 2%.
You know what I'm saying? I would have taken that trade, man.
And we're not really we're close, but we're not really at 2%.
Man,
I think we're going to want to see it.
That's
be,
crazy, though.
Around 2% and close to 2% for some time. But we're
Somebody
certainly not
took that gold
doing-
short.
we're
Don't
not
lie to me.
Saying mission accomplished or anything.
W.
like that.
Stewart's
I have to
low
say,
key. He's
though,
like,
we're encouraged by the progress that we have.
W over here. Yeah, I took that short. Did you have a stop loss? Nah, just forget it. Exactly. I like. That's what I'm talking about. Get a little comfortable. Don't worry. Don't be so freaking rigid, man. Just safely trade. You know what I'm saying?
Housing inflation.
Sell,
sell,
sell. Here we go, guys. So I think that
I
think that the market is doing what it did.
let's see.
Housing
1,
inflation is
2,
the-
3,
is the
4,
one
5,
piece
6,
that is
7
kind
hours,
of,
almost 7
dragging
hours
a
ago.
bit, if I can say.
No, wait,
Yeah.
more than that. Hold
We
on.
know that market
Sorry, the
rents
market is doing what
are
it's been
doing
doing
what we would
for.
want them to do, which is to
Sorry,
be moving
a
up at
day and
relatively
2
low
hours. My
levels.
bad.
But they're not rolling over.
Like
the leases
26
that are rolling
hours.
over
All right.
are not
The market's been doing this
coming
consolidation,
down
dude.
as
When
much,
this
and
breaks,
OER is
guys,
coming in high. So,
this
it-
could
it's
this
been
could
slower
have
than
some
we expected.
momentum.
I
You know what I'm
think we
saying?
now
You get on the
understand
right
that
side
it's
of
going to
this.
Take some time for those lower market rents to get into
Could
this. But,
be
the
it could be
direction of
retirement.
travel is
You know,
clear,
I'm thinking
and as
early
long as
retirement,
market
guys.
Rents remain,
So Stewart's
you
the
know,
only person in
relatively
here
low
who's
inflation
taken
over
any
time,
action,
that
done
will show up.
anything.
Just the time it's
Jeez.
taking now several years rather
All right,
than just
fine.
one or two cycles of.
I'll
of
take it.
annual
I'll take
lease
what I can
renewals.
get, Stu. I'll
So
take what
that's-
I can get.
I think we understand that.
All
now,
right.
but I don't think the outcome is.
We're still in
doubt
this
again,
1
as
hour
long
range.
as
That's what's crazy. I
market
want to
rents
take a
remain
trade,
under
but there's
control.
no
The outcome's
like I'm not going to get
in
sucked
doubt.
in
So
here.
I would say.
But it does.
The rest of
look
the
like
portfolio or of
my.
the
I
elements
thought
that
we
go
might
into
be
core
out of here.
PCE
When we were up
inflation
here, I was like,
have
dude,
behaved
maybe
pretty
this just
well.
pumps.
You know, they're
But it
all, they all
faded
have
so
some
fast
volatility.
right from that
We will get
liquidity
down
level.
to 2% inflation, I believe, and I
And
believe that ultimately we'll get what we need.
Now
to get
I'm
out of
thinking
the, housing
what I
services
originally
system.
thought this morning, which is that we come down here and
expressed
fill the
concern
gap.
with starting
We
to cut
fill the
rates,
gap, baby. Here goes those
reignite
data lows
demand
taken.
in housing and see
Bam.
prices
Data
go
lows hit.
more.
Inventory will go up.
You know, what's
Now,
the likelihood of that?
now it's getting
and how
juicy.
would you
This is
react
getting
to that?
juicy, guys.
So the housing market.
Very
it's hard
juicy.
To gain that out, the housing market is in part frozen because of lock-in.
Very
low rates.
juicy.
People don't
All right. We got a
sell their
5
homes,
minute
so
Watch this.
because they have a
Inventory
very
goes
low
up.
mortgage,
order
it'd be
block
quite
here.
expensive to refinance.
This is
As rates
your
come down,
possibly
people will
breaker.
start to move
Possibly
more, and that's
breaker.
probably
We don't
beginning to
know.
happen already.
Nancy
But
Pelosi.
Remember, when that happens, you've got
I
a
do a
you've got a
horrible
seller,
Trump.
but you've also
All
got a
right.
new buyer.
Take out
in
the
many
data
cases.
lows.
So
I'm going to take
it's
that off
not,
the board. Next stop
you know,
is
obvious
5 minutes.
how much
and your
additional
1
demand
hour.
that would make. I mean, the
sh-
real
your
issue
1
with
hour
housing
swing.
is that we have had and are on track to continue to have not enough housing, and so So it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And
Gosh, this range is crazy, man.
This is not something that the Fed
So if this breaks the
can really
range,
fix.
you know,
But I
flying
think as
down, we
normalize rates,
definitely,
you'll see the
we're going to be
housing
in
market
business because,
normalize. And I mean, ultimately,
you know,
by
I'd be
getting
looking for,
inflation broadly
I don't
down,
know, I'd be
getting
looking for
rates
reversals down here, you
normalized,
know?
and getting the housing cycle normalized. That's the best thing we can do for householders. And then the supply question will have to be dealt with by the market.
Careful,
and also
because
by
this is a liquidity grab now. So if you're in a short already, just be careful.
Hi, Victoria Guido with Politico.
Now, gold,
just
on the other
following up
hand.
on some of
oof.
the labor market talk earlier. You know,
What did I
monetary
tell you?
policy
It
operates
didn't have a
with
wick.
long and
We were up
variable
here. You
lags.
probably thought,
And I'm
yeah,
wondering
Mike,
how much you
that's not
see
going to go
being
all the way
able
back
to
down there and
keep
create the
unemployment
wick.
rate from
Well, guess who was right?
rising too much.
There is a lot of
I don't
profit
know,
taking
this-
happening right now.
Look,
like everything's just kind of turning red right
guys,
now.
I'm not going to lie. I like being right, okay? I like being right.
And then also if I
It's
fun.
10-year profit taking, by the way, for those of you wondering why the yields are going up.
do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July? And that
All right,
sort of
let's see
gets
if
you to
there's
the
any
same place?
SMT.
So you're right about lags, but I would just point to the
nothing
overall
really.
economy. You have an economy that is growing at a solid pace.
No.
If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to
Basically
market
fine.
participants, I mean, you know, business people who are actually out there doing business.
Basically.
So I think, you know, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind.
Yeah, we might
So
just
you're really asking
end up
about-
taking out
your
that
second question,
data
you're
wick,
asking about
and then
July,
from
and I guess
there,
if you-
it's really dangerous
if
to
you
stay in
ask,
shorts because you're still within that
you
1
know,
hour
if
range,
we'd
like I
gotten
said.
the July report
So
before the meeting,
you know,
would we have cut? We might well have.
Yeah.
We didn't make that decision, but you know,
I
we
don't know,
might well
guys.
have. I think that's not, you know,
This
that doesn't,
4 hour candle is
really
really
answer the
telling right
question
now,
that
but
we
we have
ask
so much
ourselves, which is
time.
let's
It's
look,
kind of
you know,
pointless
at
to
this meeting, we're
to look
looking
at.
back to the July employment
have a lot-
report,
too much
the August
time.
employment report,
Anything
the two
can happen.
CPI reports, one of which came of
Basically
course,
taking
during
longs, taking
blackout,
shorts,
and
grabbing
all of the other
liquidity,
things that I
building up
mentioned. We're
orders.
looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew it's clear that we clearly, literally, everyone on the committee agreed that it's time to move.
I got to make a
It's
quick
just
call to the
how
wifey
big-
real
how,
quick.
How
so.
fast do you go, and what do you think about the path forward?
That's what I'm doing.
This decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers
up? How'd
expect
it go?
those rates to drop over the next year?
Okay.
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, you know, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation. And when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. You know, we just keep it low, keep it stable. We're restoring that. So what we're going through now really it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course. And of course, people are experiencing high prices as opposed to high inflation. And we understand that's painful.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. You know, the Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I'd sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday, you know, after the CPI number came out? It was a really small probability.
Before Nikki leaks.
Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
Shot is 30% closed,
at that
and
broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about
nice little dip, nice little move up,
where it needs to be
it's,
to foster
price
over
is
the
very
medium
interesting
term
right here.
our mandate goals.
Looks
So
like
I
it
can't-
could
I can't
just
say we have a bright line in
go right
in
back
mind.
up, you know, and grab the lows, might just go up, grab some of the highs again.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent.
What a weird freaking
but
question,
why?
man.
Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world.
Here we go. The whole Venezuela argument about this is what kills countries when politicians have control over monetary policy.
People have found over time that insulating the central bank from direct
What's
control
up, guys?
by political authority.
You guys hanging in there?
Avoids.
This is kind of boring, I
making
know.
monetary policy
We're
in
just-
a way that favors
we're in a
maybe
range,
people
man.
who are in
There's nothing we
office
can do
as
about it.
opposed to people who are not in office. So that's the idea. Is that and I think the data are clear that countries that have independent central banks, they get lower inflation, and so we're not. We do our
Right, because there's deemed to be more trust, blah, 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 blah. Shout out to somebody you just signed up again on the Fed
Oh,
Flash
shut
Sale
up,
for
me,
Fed
Kevin.
50.
I don't want to hear
Charles
your
signed
crap.
up for a bundle.
You know,
here.
bundles. A shout out to the members who are already in here from the live group who took down a couple of wins today. You guys rock. Shout out to you guys.
I may have messed that one up.
Freaking
Anyway, thanks for
I am
signing
just
up for
going to
that.
go over to Bloomberg.
Remember,
I'm
we're
done with
also
you.
now starting personal
I'm done with
wealth
you, bro.
advising,
I'm done. Sorry. I have to do it. Done.
gives you the
Done with
power
me,
of
Kevin.
AI
Permanently
to build
done.
the
No, I'm
website
not
you
permanently
need.
done. I'm just taking a break.
Just last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are
Tired
in
of the
alignment
endless promotions.
with him on what those changes should be.
Freaking $2 million on an option trade, and you need that much money. You got to shill every freaking 10
And I
minutes.
think the
Come
other
on, bro.
agencies are also fully
I
on
love
board
you,
with
but
that
geez, man.
approach. And
Come
then,
on, bro.
Yesterday, other banking regulators.
You know what? Hold the second question.
He's probably a lot smarter than me.
We'll give you
He's got a $2 million option trade. The dude's
the
worth
answer
like
to your
30 or
question
40 or
is
50
that,
million bucks. Probably more.
Yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate
Yeah,
changes.
this is
we don't have
interesting.
a calendar date for that. And as for the other agencies, the idea is that we're
Once
all
he
moving
steps off the
together, we're
stand,
not moving separately. So that
that's when we're going to see
I
the
don't know exactly
runs.
where that is, but the idea is that we will move as a group.
Not that I care.
To put this
Look
again
at
out-
gold.
out for
Oh my
comment.
gosh, this
And
is
then,
such a fake out.
it'll
Breakout,
the comments
fake
will
out,
come
dude.
back
Wow.
60 days later, and we'll
Wow.
dive into them, and we'll try to bring this.
Did we not
to a
call that
conclusion sometime
perfectly?
in the first
Look at
half of
that.
next year.
It was up here. I should have just said stack some shorts, man. We have no bottom wick on this 4 hour or 1 hour candle. And 4 hour, right? Wasn't it a 4 hour? No. Yeah, it was a 4 hour as well, right?
Bounce that question to Vice Chair Barr.
Got a bottom wick now, doesn't it? Oh, dude. Wick theory is
Chair Powell. Jennifer
interesting.
Schonberger with
Look
Yahoo
at that
Finance.
dip on the dollar,
earlier
and then the
that
U.S.
decision
government
today
was like,
reflects
"Nope,
with
we're not
appropriate
doing that. We'll just
recalibration
buy that
strength
up."
in the labor
No
market
thanks.
that can be maintained in the
And you know what's
context of
weird about this?
moderate
I just noticed right
though
now,
the
guys.
policy statement
Did I
says
say this
linking the
before?
risks to
There's no
inflation
top
and
wick
job
on this
growth as roughly
4 hour
balanced.
candle. So guess where the
Given what
dollar's
you've
going?
said, though,
Which
today,
means
I'm
if
curious,
that's going
are
to
you more
continue, then what does this mean for
about the
gold?
job market
Look at this. Earlier today, I had this set up. I deleted it because we were up here. I was like, maybe I'm wrong. I had that right there.
No, I think.
Proof is in this morning's video. And I'm sitting here going, okay, it's not that I'm like, I just get excited for being right. Right? So it's not that I took the trade. It's like, okay, I saw the market and I didn't think about grabbing the highs before, but that makes a lot of sense. Like, of course, if you're a liquidity market maker, you want to grab the highs, then take your profits. Come on.
And we did. For a while,
Oh, it was
and we
perfect
kept that.
manipulation.
The stance that we
Perfect
put in place
manipulation on gold.
14 months ago was a stance that was focused
Beautiful.
on bringing down inflation. Part of
And
bringing
now
down
the top
inflation,
wick.
though,
I'm going to put a
is-
little
is cooling off the economy and a little bit
a
cooling
little
off the labor
target.
market.
Targety
You now
target.
have a
All right.
cooler labor
Right
market
there,
in
we'll go
part
to the
because
1 hour.
of our activity.
And we'll
So
see price
what
go
that
up and
tells you
create
is
that top wick
it's
on the
time
1
to
hour. It
change
already
our
created this
stance.
top
So we
wick.
did that.
Beautiful.
The sense of the change
Wow.
in stance is that we're
Fun stuff, man.
recalibrating our policy over time
BTC.
to a stance that will be more neutral.
We want to
And
bread
today
now.
was-
You're
we- I
getting
think
slapped
we
down,
made a
bro.
good, strong
Once again.
start on that. I think it was
Sheesh.
the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
vulnerable to a shock now that could tip it into recession?
I don't think so. I don't. There's as I look. Well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn, is elevated. Okay.
That's true, but history does repeat itself, and the yield curve uninverting every time in history there's been a recession. So I don't know what to tell you.
That's still at very solid levels. So I don't really see that, no.
Everyone was on him for raising rates too fast, too late.
That wraps up a news conference that
There it is. Okay,
probably
done.
15
Now
minutes ago.
back to the volatility. Let's go.
This afternoon.
Back to trading.
Good afternoon for our audience worldwide. Welcome to the program, a special edition of Bloomberg Surveillance on a Federal Reserve decision. The decision as follows: a 50 basis point cut with a sprinkle of dissent. Your equity market on the S&P 500 still just about firmer, but rolling over in that news conference. We're now firmer.
Rolling over.
Of 1%. On a
He's got the greatest voice
up by more than 1 full percentage
for financial news. He's a good one.
news conference framing policy recalibration, something he said multiple times, a process that evolves over time. Take a listen to what the chairman had to say on the path forward.
I do not think that.
All right, so we already heard all this. Whatever. Cool. Nothing new. Nothing new there. Get him off. You're off. You're off my screen, bro. You and Meet Kevin gone. Back to the music, yeah? Put some music in here. Skip that ad. Yeah, there we go. Some focus music going on here. So I'm going to spend, I don't know, I'm going to spend like 15, 20, maybe 30 minutes in here with you guys. See if we can, see if the market takes off one direction or another. I'm just kind of having fun. If you guys are having fun, let me know in chat. If you guys have, yeah, it's kind of like, those are really boring to sit through. But once they're done, usually the market will move. And like I told you guys earlier, you could see something to where we, I know it sounds crazy, but just keep consolidating into the overnight session potentially. And then you could see an explosion. And then basically after that, after the market just like breaks a range with a lot of volatility, you'd see it just continue for a couple of days. So I don't know. I think there's still, like, what did I say this morning? I told you guys that I thought that this would just lead to uncertainty. And it kind of feels that way. Like, he's trying his best to make it rosy, and I think he's done a pretty good job of making it rosy. He's definitely got to get better at spinning. I agree. But he's done the best he can at making it feel rosy. So what are you going to do? You know, data lows were taken. That means this could really go any direction at this point. You just have to kind of be patient and wait for your setup, wait for your entry model, whatever. You know, if you don't have an entry model, you can learn mine. If you do have an entry model, then you're going to wait and be patient. We already have a couple wins for the day. I'm feeling great. $2,500 on the books in a 5K account that I didn't mean to trade. You guys have been there, right? Yeah, I know you have. So we just wait, man. A lot of trading is waiting. You get to know people when you wait around long enough, huh? By the way, this is my favorite wallet. This is an Apple wallet, right? It goes to the back of my phone. Who's got this? Anybody got this? It's just a magnet, dude. Look at how thin this is, right? I was so tired of putting big wallets in the back. So this is your Apple. Link is in the description, by the way. If you want to purchase one of these, link is in the description. You know, right now, 50% off sale. Who do I sound like there? Kevin? Meet Kevin? I'm kidding. I'm not repping Apple wallets. But that would be funny. Yeah, guys, these are my headphones, studio headphones. Link is in the description. It's what I use every day when I stream. I put these on and I stream better. I can hear myself perfectly. These are awesome. You can use them for the studio. You can use them for live streaming. Link is in the description, guys. 20% off, 20% off. That's called Life is for Sale, bro. I just put everything in here. This is a little light that I use. Okay, it's not on right now, but you can use your imagination. When this is on, it's so cool. It lights up. Link is in the description, guys, by the way. This is my third mouse in the room. Okay, this is an Apple mouse. Link is in the description. Thank you. What else do we got? I just started holding things up. Oh, this is a Yeti cup. I got Yeti. Link is in the description. My Shopify store has everything you need. Yeah, this is an old Xbox. That's not that old. Oh yeah, this is the old one. The new one's out in the other room. I got my old Xbox. I just started pulling stuff out. That would be hilarious. Price has been super freaking boring, so I'm just trying to, you know, keep you entertained, man. Somebody didn't like that. They're out of here, man. They left. Like, screw this guy. I don't want to buy his stuff. He's shillings too much stuff. He's trying to shill too much stuff. I'm out of here. Well, what are you going to do, Price? Went and retap the lows. That's fun. Okay. We didn't even turtle soup. We didn't even reclaim the lows. Oh, that's hard. That's a tough one. This could potentially put me in the riskiest trade of the day. I at the end of the day on a winning day. So what could I do? Oh, that's good. What could I do if I want to take this trade? What could I do? Somebody tell me in chat. But it's a risky trade because we're inside of a range. We're going to range trade. This is probably what I'm going to end up doing. Make sure I have the right account this time, ladies and gentlemen. Jeez, that's freaking nuts. All right. What an amateur mistake, huh? Make sure. Good. Go with the 10. This is looking pretty good. So what am I looking at? Okay, fine. You twist my arm enough. Well, look, we tapped the bottom of the range. It's a range trade. This is not high time frame liquidity, which would be underneath this swing. Let me go ahead and mute this. There we go. So I'm actually looking at a couple of things. I'm looking at a market structure break on a 1 minute time frame. Oh my gosh. You guys are going to kill me. All right, here we go. 1 minute time frame. Boom. There's your break. Here is, one of these. Pick one. Your breakers in here, right? You have a fair value gap overlapping that breaker. This is literally a pattern right now. I don't like trading patterns. All right, go do 1 minute breaker. I'm just labeling everything out. All right, there's the fair value gap, 1 minute FVG. Okay, so you could actually turn this into like a really cheap trade if you want. So this is the idea, right? You run the highs. The highs have not been ran. The lows have from this data wick. Obviously, this is just a 1 minute time frame, so the next minute still has that data high. May actually not even turn back down. So you could scale in if you want. Light sizing, and I recommend really light sizing because this is faked out twice already. Let's see, 1, 2, 3 times, and we have multiple other instruments that have faked out as well. So it's still within this crazy range. Just got to be very careful. So yeah, I'd prefer market to come back down and get a cheap trade. But 3 minute broke structure to the downside, 5 minute broke structure to the downside. We're still within a range though. So all of this structure is internal structure. It's not external. There's no change of character internal. It's just all BOSs. Okay. So, and this 1 minute to go on a 30, boy, what a nightmare of internal structure this is, huh? All right, so we'll just wait. We'll see what happens here. This is the riskiest trade of the day. And so just keep that in mind. I've already got some wins on the books. I should just close the laptop and go and have fun. But I got 40 minutes till I got to pick my little one up. Okay, here we go. Entering the market and entering the market now. So I got really where that's at is where my entry is at. Let's see. Okay, very nice. You can see here, this is where I took the trade. Oh, whoops, sorry. It's not clear, sorry. Yeah, this is where you have to zoom in. This is what you said earlier, that was funny. But yeah, just showing you guys I'm in that trade. I did what I said. No? I do what I say. Yeah. Okay, about $300 up now. All right, stop loss at break even. Let's go, let's manage. Tight. Because of where we're at, guys, I don't feel like extremely confident. I'm taking half off the board now, taking 5, and I'm going 2, and I'm going stop loss break even. Boom. Wish I could show what I do on my phone. Maybe I'll get a streaming service that can stream from my phone. Okay, stop loss at break even. You can see right here, right? Stop loss break even. Another win for the books today. Congratulations, guys. If you got a W on this trade, if you are set for the day, type W in chat, man. Let's get pumped up. Come on, everyone at once, dude. Nobody should be, if you're in here to trade. What the heck? Come on. Let's go. Man, refresh the screen or something if there's too much of a delay. I got to go for low delay. I don't know what's happening. If this is too much of a delay, then YouTube just doesn't work. That's why I don't like streaming on YouTube, especially when we're going off of these quick trades. But yeah, man. We're looking good. I'm so used to instant feedback in the chat. It's kind of weird sitting here waiting. I don't know how much this is delayed. It can't be that much, right? 20 seconds, 30 seconds? My gosh. A minute? What the heck? I asked for W's like a minute ago. This is crazy. Wow. Yeah. All right. So now what can we do to manage this trade? Let's hunker down, right? Aggressively managing this trade. First of all, I see the fair value gaps on the 1 minute. I'm not oblivious. I know that we're going to probably hit some resistance here. I know that we're already crossing this fair value gap and we've inverted it. So that's good. We need a leg up to hold the trade. We need a leg up and then treat this as a shelf. So this would be your shelf. At least give me something there, right? Because we're so close to the entry that that's why I said you have to aggressively manage. So this was a perfect entry, nice shelf, good fair value gap, good displacement. That is literally the one strategy for life right there. The only difference is that it didn't grab high time frame liquidity from the bottom. Okay, so there's really nothing else to look at here. 30-second chart. Let's see if we can zoom in on 30-second. If this is going to give me any type of structural break on a 30-second, then I can dip, but it's so close to my entry, I might as well. Either I'm going to exit because I feel like this is a double top on a 30, or I'm just going to hold it. Probably a better chance. I've already closed half, but yeah, you're looking pretty probable to hit break even now. Probable to break even. So do you give away $100 or do you close it? Huh? Give it away, close it. Give it away, close it. If it drops below $60, I'm going to close a trade. Those numbers can move pretty fast. $60, I'm going to close the trade. We're up 200. There we go. You can see, I'm just watching those numbers, right? And I make a rule in my head. If we drop below 60, even though we haven't, because I might as well just grab 60. Come on, man. The odds are when you come down this low from your swing points, right, that you're going to probably retest the lows. But now things are looking okay. Now you're in the middle. Now it's like, okay, what do I do? Okay, let's see. I have 5 on it. Let me close 3. So $140, $100. I'm going to close 3. Actually, $100. I closed 3. Closed. Okay, I closed 3. I got 2 rocking with me now. So I scaled out of my position a little bit at a time. I got 2 rocking with me now. There's 2. And this is probably going to hit my stop. You'll see it disappear. Most likely, boom, hit my stop. Pretty much where you saw, right? All right, that was fun. Right on. Brings my daily on the main account. Let's see. 382. That's not bad. 382 ain't bad. Let's go. Guy got bright on camera. That's cool. 382 and then $2,500 by accident. I'll take it. Woo! Let's go. All right, guys. This was a lot of fun. I'm glad that little bounce worked out. I don't know what's going to happen. I trade and then I get off and I say thank you to the trading gods for another win. That's 3 for 3, 4 for 4, something like that, whatever we are for the day. I'm beat, man. You guys enjoy the rest of your day, and appreciate you guys for joining me. I might be doing some more YouTube lives. I don't know. We'll see. I think it's kind of fun, you know. I need to get with lower latency because I can tell there's like too much latency here. So I got to test that out, maybe do some things to get better at that. But yeah, guys, so if you're in my private group, I'll see you tomorrow morning. We trade live every day, Monday through Friday together. It's fun. There's always something to learn from, whether we win or lose. We don't win every day, but we do all right. We do all right. We haven't had that bad of losses and runs on losses, right? We really haven't. So that's cool. And yeah, guys, that's pretty much, I'm going to wrap it up. Okay. Peace. Later. Over and out. Hasta luego. Sayonara. Ciao. All the above. See ya. Or not? No, I'm just kidding. See ya. That's funny. Oh, jeez.